Hello everybody and welcome to the Secure Insurance Group home office in Springfield, Missouri. I'm Monty McCurley. I'm the Director of Annuities and Securities. What I want to do today is just go over a brief case study, and we're going to be using the SILAC annuities to do this. Our plan is to come back with you each week and offer some more training on different products, different types of annuities and what they're trying to accomplish. So today we're going to log into our SILAC annuity portal here. Once you get your contracting finished, then you'll go through and get a username and password, and this is where you'll come to on the SILAC annuity portal. If you see here on the left hand side the different tabs, once you get business in there, it'll start populating here. You have your commission tab, different reports that you can pull up just depending on what you're looking for. It shows you all the products that they have to offer. They've got the Denali bonus, the Teton, and the Teton bonus. And then they have a couple of different multi-year guaranteed annuities. Communications, how to get what they've actually sent out in the last few months, different reports, then all your support numbers and addresses and everything that you're going to need right here. So what we're going to focus on today is running the illustration. And then you just click on the Sales Tools tab on the left-hand side. It's going to bring you a couple of different calculators. And then what we're going to look at today is the illustration software. Very simple. Like I said, once you get signed in, I can help you walk through this. All right, so what we're going to look at today is a 65-year-old male. I tell you what, so we can show some different indexes. I'm going to illustrate this out of Texas. In Springfield, we can show we can sell the Barclays index, but we can't illustrate it. So I'm going to show you how to make sure you're getting that Barclays index in your illustration. This person has $250,000 of non-qualified money. So let's look at the Denali 10. So you enter your information, you hit next, and then you just enter your client's information. Like I said, he's a 65-year-old male. There's not going to be a joint owner at this time. We've got an initial $250,000 deposit. No additional premium. And we said this is non-qualified money. Alright, so we've got that done. Then this is where you're going to pick your indexes here on the second page. There's several to choose from. You can have it all in fixed interest. You can spread this out to as many of these as you want to. And I'll go into detail on a few of these. We have the S&P 500 1-year point-to-point with a cap, which just means it's going to be a 1-year term for your index to show up in your account, and it's going to have a cap. We'll look at the cap a little bit later. You have the S&P 500 point-to-point with participation. That's one that we use a lot. And then the one I was talking about was the Barclays Atlas 5 point-to-point with a participation rate. Just for simplicity's sake today, I'm going to show that we're putting all of our money in this index. And we're not, at this time, we won't illustrate a withdrawal. We are trying to set this up for maximum income down the road. So once the illustration comes up, you can look at it a couple of different ways. I like this first screen here because this does show you the different caps, the participation rates, and those type things. If you look, we're in the Barclays Atlas 500 or Atlas 5 point-to-point right here. It has a 105% participation rate currently, and so that's what we're in right here. It's got the bar chart. What I like to look at is, and this is what your customer is going to see, you just click on Print PDF. It'll populate eventually. Oh, we have to pop up more. All right, we'll try that one more time. Print the PDF, that's going to pop up, and we'll take a look at that. Alright, so once you get that, this is going to come up in a PDF form. If you look right up here in the right hand top side, The down arrow is going to allow you to download it if you want to email it to your client or email it somewhere, and then you can obviously print that out. The first few pages is just your definitions, very important stuff. You want to touch on that with your client to make sure they fully understand it. You're still on definitions here. One of the first pages that I like to look at with my client, this shows your lifetime withdrawal percentages. So depending on what age you are, whether it's going to be a single annuitant or a joint annuitant, this tells you what age and how much you're going to be able to withdraw, what percentage of your account value. So our guy right now is 65. If he turned income on right now by himself, he would get 5% of that $250,000. Okay? So let's say he waits till he's age 72. He wants to turn it in. His withdrawal percentage has gone up to 5.7%. And that's whatever the account value is at that time. This just goes back and shows us we touched on this briefly just a few seconds ago, but we've got 100% of our money in the Barclays Atlas 5 point appointment with a 105% participation rate. And the first part of it here shows you the guaranteed policy rates. If you'll look, we started with the $250,000, and this is assuming, the guaranteed rate is assuming that the stock market has a loss or 0% every single year. And that has never happened in the history of the stock market. In today's times, you can't say never, but that has never happened before. You look out through here, and the cash value in your account, it's going down. It starts at 226. Over time, you're going to get that back out. In year 11, if the market's been 0% every single year or lost money, you still get all your $250,000 back. This shows your lifetime withdrawal rate or lifetime withdrawal income, and that's per year. So if this, if our client here decided to turn on income after year 2, he would get $13,000 lifetime income guaranteed for the rest of his life. And then on this column, it's the wellness withdrawal column. And let's just say he goes out and he starts his income in year 6. His lifetime withdrawal amount would be $14,000. The wellness withdrawal would kick in if the doctor certifies that he can't perform 2 of the 6 activities of daily living. And for a period of 5 years, he would get the wellness withdrawal, which is $28,000, and that's double what his annual income is from this policy. Once the 5 years is over, he can't get the wellness withdrawal after that, so his income would revert back to the original amount of $14,000. And this is in the guaranteed column here. So we always show our clients that, and then we also go to this page, and this is the non-guaranteed policy values based on the last 10 years, 12/31 of 2010 to 12/31 of 2020. And so this is what our illustration looks like. We put in $250,000, our account value over time. You see your interest credited column here. That's how much, this is the interest credit rate, the percentage that you're getting of the market that year. And this is the dollar amount that is credited to the account each year based on the illustration. So if you look out here after year 10, your account value is more than doubled. It's going to be $506,000 according to the illustration. You go over to the lifetime withdrawal amount, that if he turns on his income after year 10, he would get the $30,368 per year. And in this scenario, if the doctor says that he can't perform 2 activities of daily living, he would get the wellness withdrawal for a maximum of 5 years of $60,737. Now after that 5 years, once again, the yearly income will revert back to the $30,368. A few more pages that we go through. This just takes you all the way up through age 110. This is the here's what I like, one of the things I like to focus on with our clients. This is the most recent 10-year history. You can see that the most recent 10 years, the Denali has averaged a 7.31% return. The lowest 10-year period, 6.48%. And then the highest 10-year period, they averaged 8.75%. And that shows you that this index is managed for volatility. You're not seeing a really high rate over here and a high and a really low rate here. It's managed for volatility, and that's why you have relatively close numbers, and then your most recent 10 is the 7.31. So you always show the client that. You have your bar graph here, which allows them to see how much their money would have grown, the most recent, the lowest, and the highest. I touch on all of this with my clients, but certain pages I definitely go over more than the others. This is your bar graph again, that's showing how your money's working over time. And then you finish out the illustration with your information about the Barclays index. It gives you some disclosures, tells you what actually is involved with the Barclays index. And it's just a very good tool to sit down with your clients and go over. You know, if you have any questions on this SILAC product or any of the other products, get in touch with me. In our next video, we're going to talk about F&G products and how to do those illustrations. And then we'll come back and do a video where we're showing you how to go online and do the electronic app with the F&G products and the SILAC product. Thank you guys for listening today, and if you have any questions at all, please reach out to me. The office number is 417-883-9300. Thank you.